Morning, Steve here in Chicago with the morning grain comments. We hope everybody has a wonderful holiday. The CBOT closes early today at noon today, and will be closed on Monday, and reopening 7 o'clock Monday night. So we'll see what happens over the weekend. As far as news, beans are up a little bit, 2 cents. Oil's up a little bit. Malaysian palm oil futures were higher overnight. We also note that while the weather across central and southern Brazil and Argentina is good, northern Brazil is beginning to dry out, and there's no rain forecasted for the next 2 weeks. So we'll see if that has any premium putting back into the beans after the beans last night traded below $10. So that's technically a psychological break of support, and the charts are trending lower. Corn still, I think, in the trading range it's been for the last 3 months. We're at the lower end of that range, so we should start seeing slower farmer selling and a little pickup in the basis, which should offer some support as we go into the new year. Wheat's near contract lows. There's too much wheat in the world. Not a lot of weather problems in December or January to trade. So we'll see if down the road there's any issues with the dryness in the southern plains or any other global issues that might offer some support to the wheat market at contract lows. The higher dollar and the perception of the dollar is going to move higher offers resistance to the wheat market. One ag magazine yesterday said that the story of 2016 was weather. It usually is weather, but this year we had a rally in the spring because of dryness in Brazil and wet conditions at harvest in Argentina. I'm sure the U.S. farmer is hoping that happens again. But then U.S. weather was good, and we had record corn and record soybean yields here in the United States, and prices went down. So far there's no real indication of any weather extremes in 2017 which offers resistance to the market. The same magazine said that the event of 2016 was the U.S. presidential election, and we are going to see how things fall out there. On one hand, we're looking for maybe better economy, more jobs, less regulations. But on the other hand, the president mentioned overnight that there might be a 10% tariff on imported goods. I don't think anybody wants protectionism, isolationism, or tariffs. That's not necessarily the way to go. There also was talk that they will not extend the blend credit for biofuels. So there was a lot of ag stocks yesterday that were down, and I think that it's going to have to be watched pretty closely how this administration handles China, and how the administration handles ag subsidies, and this new group will be writing the new farm bill when we have farm economy working lower. So again, 17 probably should be a little bit more volatile than 16, and as always, the weather is going to be key to what prices farmers receive during the year and what prices end users pay. The best thing for farmers to do is sell corn that they have and buy a call. And the best thing for them to do in the beans is, should have been at 1070, but buy a put and see how far prices go down. Last year we were sitting with the same fundamentals and people were talking about $8 beans. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe holiday and a profitable trading day.